S&P had a rather quiet day, simply bouncing around ahead of CPI. We're going to go over CPI tonight in great detail, what to expect tomorrow at 8:30, what kinds of moves you can expect. We're going to go through some of the estimates from some of the largest banks in the world. Earnings. We must go over earnings tonight. There's some real dumpster fires out there. There's some real blowouts as well, and we should cover them all so that you're prepared tomorrow. Let's get to it. Welcome back, everybody. We have a lot to go over. It's going to be pretty packed with information this evening, so let's just jump right into it. 8:30 tomorrow, we have CPI. The most important level in the S&P futures is that 4,200. We have been unable to get above there. Now, we're not breaking down. We're not doing anything. We're just bouncing around. We're just really in that trading range. 4070 has been tested a couple times. We're just not breaking it. If we carry that over, dropping at the top here, you can say, okay, well, that's actually 4080. Call it what you like. You can actually carry this all the way through a little bit more, right? And you can kind of see these levels and how you've been rejecting these levels. And that's what's really important for us to note. So tomorrow, these are your two main key levels. And this is exactly what you're going to want to watch tomorrow. You're not going to want to make sure that you're near one of those and then acting on it. And I'll show you what I mean. So by acting on it, I mean, if you're up here, you don't want to be a buyer. You want it to confirm the move. You've been unable to get through this several times, right? If you're down here, you don't want to be a seller. So what we want to do is we want to utilize the range and what's happening. Now, in this morning's pre-market live call that's public, we went through some other key levels to watch today. 4150 was another level that you need to watch pretty closely. That's more of an, to me, it's more of an internal level. It doesn't really carry the same weight, 4120, as these two main levels. But these are areas and places of interest that you could bounce. So for tomorrow, for you to watch the market, I would suggest you either write these numbers down, these four numbers, or just screenshot it. And make sure that you subscribe to this channel. I give actual actionable information in this channel that you can utilize the next day in the market. That's the purpose of these videos. If you're watching them, the information that comes out in the daily videos is good for about 48 to 72 hours. The one videos that we do on Saturday, they should be able to carry you through the week with the themes. That's kind of how I have it set up. You can comment on it. I do read the comments. It does help me create content, but to me, I think the best way that I can give you value is to go out there and tell you what I think is the most important thing and where are the most important areas. And these are the four most important areas in the S&P right now. Now you can see all my levels here on the daily. We squeeze that down and you can see and become Captain Obvious and come straight across and you can see our levels in here. Well, this is pretty important, all these levels, but let's drill into this on the hourly and get a better understanding of what's really going on out there. So today we saw this trending down and we saw a positive divergence on the RSI and it let us know that we were setting up for a move. So we did see that coming. It was pretty obvious, but it is what it is. It worked out well. But here's where we're at, and this is how we have to view the world. So for us, this bottom level is what I would refer to as a mid-tier level. In other words, it's not that important. It's important, but not really. And what do I mean by that? I mean, I care if I break 13,000, we're going to call it 13,266. It's really a range around that 13,000 to 50. If we go here and we move this down just a little bit, just a hair, right, you're going to see it come down a little bit more. And I actually think that I should just use this, just not to confuse everybody, and use the low of that wick. I think everyone would be a little happier. I like using these closes and opens and understanding that the wicks are price rejection and then seeing the battles that go on in there. But if you take a look at this level, you can see right here how that it has become a battleground. And that, of course, is something we want to pay attention to. Here's a 3-bar pattern that we've gone over several times. And now you can see those breakouts. I should probably just do a video right on that particular pattern so people understand it and then they can utilize it themselves. It's a very simple pattern. It wouldn't take me very long. It's actually pretty accurate too. But this is where you're at. Now, what are we having trouble breaking above? You cannot break above this 13,350. Right? So tomorrow, and this is really important. These are some of the things that you're going to want to watch tomorrow. We're going to clean all these off for a moment, and we're going to scrunch this down so that we can get some of these other lines in and just kind of come over for a moment. So what's important to us? Well, what's really important, instead of me giving you several different lines, I'm just going to give you this one. That's right at that 13,000, and you can see how that's been a battleground. So the important thing that you need to take away here is when that CPI hits tomorrow morning, you need to be prepared. To be prepared, you need to have your level set the night before, okay? I just went over this in a video where I walked through how to do a very specific kind of trade, and I'll link that video at the end. It's more of a tutorial on how I did a recent trade, but intraday, and I'm using some of these techniques longer term. In other words, what I do intraday, I also do every night. So if you take a look at these levels, and you can kind of see how you're in here and you're kind of wedged in here, right? So these are very important levels. Now, this 13.3, that's kind of like a minor level. We've had a couple battles going on in there. I'm going to leave that in, but the real battleground is 13.5. Okay, that is your real battleground. If you trade up in the morning on CPI and you cannot get through there, we're going to want to know why. We're going to want to have to pay attention as to why we cannot get through there and then go from there. Okay, that is going to be very significant to us to make sure that we get through there on a good number. And are we going to have a good number or not? I have my beliefs in how it could come out, but there's a lot of different data points to look at there. Now, this 13,250, we're going to have to watch that. The main level that you need to make sure that if we fall apart tomorrow and the estimate comes out and we're higher than we should be, you need to make sure that you hold 13,000. If you break 13,000, then all bets are off. And you want to see a real break one way or another. Now, the easiest way to see these breaks is going to be this. So in other words, let's say that we come in at 4.7. I think the number is 5 or 5.1. Let's pull that number up. Now I'm just going to go to the site very quickly. And this is core CPI. 0.4 is the forecast. 0.4 is the previous. Core CPI is without food and energy, 5.5 versus 5.6. Expecting a decline month over month. They're expecting it to go the same exact way. We come over here and we take a look at this. I find this pretty interesting, actually. Year over year, they're saying 5%. Month over month, though, they're expecting this increase. That doesn't really make a lot of sense to me, to be candid. You're going to say the month over month, oh, we're going to be up, but the year over year is going to be 5. So there's some reasoning for that, and maybe we'll get into a little bit of it, but it's important to understand where we're going with this, because we're going to get into the scenarios, the percentage chances of what's going to happen tomorrow, and then the percentage of moves that's going to be implied based upon what happened. The number one number everybody's focused on tomorrow is CPI year over year. Now we're going to talk about the levels and what can happen, but very quickly, remember these levels or write them down. 1, 2, 3, 4, 5. This is a minor level, but it's there. And it affected us today. So that's definitely something we're going to want to watch. Now, a couple key things. You never know how these numbers are going to play out. But if you go and take a look at crude oil, and I've used this very back of the envelope way to look CL and crude oil going into tomorrow, the majority of what we're seeing in CPI is really going to be auto sales being up and rents. That seems to be the rub right now. Energy drives everything. And if crude oil is down, for example, March, crude oil, we were only down 1% for the month. And then April, if we mark from April on, we were down 4%. Well, that's a big difference, okay? And that could affect CPI, making CPI weaker. Now, I want to be clear about this. This is a back of the envelope way that I look at CPI and how I look at things. Some people will look at Manheim used auto pricing. Okay, used car pricing is 3% of CPI. The big part of it, really a third of it, is linked to housing and shelter. Everything is tied to energy because you need transportation to get everywhere. Just keep that in mind. So if we look at gasoline, you can see how we were up positive 1%. Now we're down 9.5%. I use these back of envelopes, and what has me thinking about this is we were 5% on CPI here in March, and now we have gas prices down about 10%. These are just gasoline futures. And again, it's how I kind of look at it. Now, I think if we take a look at rents are down. I think rents are down more than people think they are. So I'm very curious how this plays out tomorrow. Gun to my head, I would think it's going to be a weaker number than anticipated. And then we'd roll into Thursday. But you never know how these numbers play out. You just really don't. But when I look at something like this, I'm feeling more that we're going to be under 5. And what's interesting about this is I'd be shocked by looking at this and comparing with the CL, the crude. It'd be very rare that we're going to be this substantively low and come out with a huge number. And you can even see that JP Morgan even had some comments about where they think the number is going to come in and the probabilities and the moves. And let's get into that right now. What I'm showing you is what JP Morgan thinks is going to happen tomorrow with CPI. Keep this as a guideline. Headline: year over year prints above 5.5%. This tail risk scenario, tail risk means the probability of this happening, right, is 4%. And tail risk refers to what if this happens. Will likely come to fruition if we see significant spike in housing prices and commodity prices. Dating to the March 22 print, we have not seen the consensus miss the actual print by more than 30 basis points. Consensus is for 5%. So I want to just be clear what they're saying here. Dating to the March 22 print, meaning from a year ago, right? Well, now at this point, it's 14 months. We have not seen consensus miss the actual print by 30 basis points. So they're telling you if you're at 5% in the past year and you've had 12 numbers, that if you were 5% every quarter, maybe you're 5.3, maybe you're 4.7, but you're in that range. So anything outside that range, meaning 5.5, would be an outlier, and therefore they're suggesting that the S&P would lose at least 3%. Now, if we go into this and go between 5.3 and 5.5, now 5.3 is doable, right? Because that gets us in that 30 basis point range. This scenario would be a shock to the markets. I agree with this. But seeming unlikely that we experience a significant sell-off since the spike in yields is likely muted given the bond market's fear surrounding bank contagion and the debt ceiling leading to more bond buying. So in other words, even if we spike up and CPI goes up, the move is probably going to be muted. And the reason they think it's going to be muted is because people are buying bonds because bank contagion is certainly not done. And we're going to address a little bit of that tonight with the time that we have. And the debt ceiling talk, it's one party pointing at the other party saying it's their fault. So people buy bonds during this period of time, and that's exactly what happened. So if you combine that together, you can see that the probability of 5.3 or higher is roughly around 29%. If you find value in what we're doing and what we're going over, I would appreciate if you start sharing these daily videos so we can get in front of more people and show them what it truly takes to be successful in trading, to actually give them real information. Most people will watch things if it's shared versus me posting, I've noticed. So I do appreciate it, and the purpose of me doing all this is to educate. I doubt highly there's a lot of people that are going to walk you through these scenarios, but you might want to screenshot them and you might want to pay attention because they're fairly accurate, and they've been fairly accurate probably since this has begun. So if you take a look at where you're at, there's a 50% chance, and I want to be clear about this, there is a 50% chance this inline scenario gives some comfort that disinflation can continue, but this is not enough to reprice yields higher. Instead, the bond market likely waits to see if the June print confirms or refutes the trend. So we're looking for a 5% number. I just gave you a scenario that was 30%, okay? And we're going to call it 30% and 50%, and the number's 5. So according to JP Morgan, if you add that all together, they're saying there's an 80% chance this number is going to come in higher than 5%. Okay, so if it comes in at 5 or lower, and JP Morgan is telling their institutional clients, Goldman's saying the same exact thing. Goldman's number is a little closer. They have a higher degree of probability on the low end. They're more skewed down than JP Morgan is, but we're only going to go over JP Morgan tonight. If you look at this, that means that we have an 80% chance of being 5 or higher. If you come in lower than 5, that is not what institutions are expecting to happen. If that happens, equities are going to rally more than JP Morgan thinks. That's my opinion. It's just an opinion. So if we take a look at this and we go to the next one, they're saying 5 to 5.2, we're going to add 50 basis points to 75 basis points. Maybe that put you right back to that 4,200 level. 20%, if we come in at 4.7 to 4.9. Now remember, this is in that 30 basis point range because the estimate's $5, or 5%, I should say. A slight beat would likely give comfort that current hiking cycle is complete. I personally think it is already complete, but We'll see how this plays out. Obviously, a huge spike, and it's not complete. Getting ahead of the June print further, the scenario may lead to the belief that the consumer can remain active without spiking inflation. Very true. You could see XLY go up on this. So XLY is consumer discretionary. You could see retail go up if we come in under 5%. And you'll notice this week, and we're going to look at XLY in a moment here, but you'll notice this week that you started seeing buying in XLY, right? So that's kind of interesting. That kind of came out of nowhere, right? And it hasn't really been that strong of a sector, and all of a sudden it's becoming a much stronger sector. So it seems like people may be placing bets that this is going to come in lower, but that's just conjecture but by me looking at order flow. So if we see this, okay, 1, 1.5, 4, 5, all bets are off. This is a tail risk scenario. They're saying the chances of 4, 5 are 1%. Now, why do I want to point this out? Okay, I want to point this out because if this happens, it is going to catch everybody off guard. Okay, if we come in at 4, 5 versus 5, it's going to catch everyone off guard. You have not seen a number like that, period. And it's going to catch everybody off guard. Okay, and that would take us through 4,200. I agree with that. Over the last 14 prints, there have been 5 that have been at least 2% in either direction. 3 of those to the upside. It adds at least 2.5%. I agree with that. There's a 1% chance of this happening. Now you've got my little back of the envelope. You now know what JP Morgan's saying. And I just want to point out something. So I always look at order flow. I don't really care what people say. I want to see what they're doing. This is XLY. So I found this somewhat interesting, and I'm just going to share it. So this is Friday, and we started trading up on Friday. Then yesterday, we started trading up. Then we started trading up. Now, what's interesting about this? While it was a very quiet day, if we go out there and take a look at this, okay, you had some biotechs. Biotechs really look like they may be the leaders in the Nasdaq, and I'll save that for another video. And you're seeing some industrials bought, and that just makes sense because if you have a weak dollar, then they do better. Now, again, it's a very quiet day today, and we're all aware of that, right? It was brutally quiet. But look at XLY and where you are in consumer discretionary. You're more than utilities, than financials, than staples, than our consumer media names, materials, healthcare. So your number one sector, if you take out these 2 outliers, and I don't care if you even leave them in, let's call it in the top 3 of all the sectors today, is consumer discretionary ahead of CPI. So then we go back to our statement to just reiterate what my point was. We take a look at the 4749. A slight beat there would likely give comfort to the current hiking cycles complete, getting ahead of the June print. Further, this scenario may lead to the belief that the consumer can remain active without spiking inflation. So what this means is, yes, tech will move tomorrow, but retail might move even more. So if we're between 4.7 and 4.9, we're going to be looking at the retail names. I would be focused on the names like ON, Nike, CELH. So they had really good earnings tonight, and we're going to walk through this just very briefly. You're seeing an 18% beat. You're seeing earnings up over 100% of the estimate. Really hard to come out and say that this had any flaws. I didn't see any flaws, quite frankly. The only thing that I would suggest is, do you really want to be that guy that's buying it when it's up? Usually goes up for a day and then comes back down. You come back down here, goes up, then consolidates for like a week and then breaks out. You can just see this over and over again. So I'd be really cautious of that. I also take a look at that level where it stopped going up. Right, it stopped right at 115. That's not ideal. So I'd want to watch that level tomorrow and see how it acts. Now, if we take a look at dumpster fire of the evening, which was Airbnb, and this is always fascinating to me when I see things that are on social media and people are trying to explain why it was not a bad quarter. This is really simple. Demand is off. Okay, so you have demand down for next quarter. If the company guides lower in the future quarter, that's bad. Okay, that is just fundamental analysis 101 on how to read an earnings report. So if you take a look at this, okay, so the revenues beat, but their expenses to get those revenues were higher than anticipated, and so therefore they missed. So they missed on the estimate, and they lowered guidance for next quarter and said demand is going to slow. So there was nothing redeeming to me about this conference call. Nothing. And I think that's really very important for me to get out there. I would not be going near this name now. Could you sell down and then rally? Sure. Anything can happen. It's not something I'm going to go near. I don't want to be buying stocks that are having problems. Like I have enough problems. I don't need to be buying stocks that are giving me problems. So just trying to make you laugh, but you get it. So if you take a look at RIVN, there's this shelf offering out there that they're not giving details on. Just a disclaimer, I have a short position on. I've had a short position in for a very long period of time in this name, but I actually shorted it after hours and basically flat up about 15 cents in it right now. And I'm not really sure what I'll do with it into the close, but the shelf offering should let you know that they need money, right? And that shouldn't be a big shock here. They need a lot of money. But they missed on the revenue side. They're not able to produce the way that they thought they were going to produce. You're not in the zero interest rate environment. Same thing with Lucid. So you're seeing these names, and these names are just, in my opinion, they're all going to just get absolutely decimated. You're seeing it with NIO as well. Going forward, now this was a surprise, an absolute huge surprise for me. Now I have these levels marked off because I've been trading this thing. Geez, I've been trading it all night, candidly. So if I take a look at where we're at and we're above that 200-day moving average, let's flip into this really quickly and let me just show you this. So this is where you are after hours. One of the things I like to do after hours, and we do in the community, is I always say watch the first 15 minutes and watch the first minute, because that lets you know where the algorithm is, meaning the high frequency traders and the algos. So you can break above that first minute and you're looking, then maybe you have a shot, you let that settle, and then you use the low of that bar as your stop. So if you can see that, now you pushed ahead. Now forms a flag, and you can see the flag here a little bit better on the 5, right? And then you come in here and you just draw out. You see it on the 15, get it? Okay. So here's where we're at. We can see the flag and we see how we're breaking out. Now we're holding that 1914 level, but overall, let's be very clear about this. Okay, they beat on revenues and they made significantly more money than people thought they were going to make. Okay, they beat earnings by 43%. Now I could call this company dumpster fire all I want, and I could say that I think it's a zero and blah, 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 right? I can have my opinion, but this was a really good quarter. So there's not really much for me to knock here. And they're raising guidance for next quarter. So the conference call seems to have gone extremely well. I have not listened to the whole thing. I would be very interested in how this performs tomorrow, dependent upon CPI. This could be an absolute monster because a lot of people wrote this off. And if they're able, what we're going to do is I'm going to clean all this off. If they're able to get it together, meaning more than a day and then a couple other quarters, well, this could be an absolute monster trade because you have an enormous base right here. I mean, it's just enormous. So if you can start getting in here, right, and start bonking around in there and building, you have something that you can work with. And I think that's really important. There's no sense in really going back all the way back up. So that's what I have for this evening. As always, please comment on this video. Have a great night, everybody.